Welcome traders to our post-week market review. So jumping straight into things here from where the market opened up, which is here. This was the first candlestick followed by a continuation of this overall bearish drop. Price pushed down to the level of 4,100, and then from there we then saw a change of character and bulls enter back within the market. We spoke about this in our midweek technical analysis about price reaching the level of 4,600. At the time we did expect, due to the change of character and other price action candlestick confirmations pointing towards this overall bias, we did expect price to continue bullish from here. However, you can see that volume stepped out of the market and we saw lower volatility, causing price to sort of slowly fall back down to this level that we are now testing as a support of around 4,360. From there, price then reacted and rejected off of this level. We got a lower time frame head and shoulders pattern. We saw the neckline broke, and prices then come up to test that level of 4,540. So you can see that this overall level has some sort of respect, some sort of value in it. As you can see, we originally created a lower low here. Price came back down, came up somewhat to test it as a lower high, and then obviously we saw a change of character where price broke above it, tested it as support, but obviously the bears stepped back into that market closer to that Wednesday Asian session, pushing price further down. But as you can see, the bulls have stepped back into the market. So what could we expect to see in this next coming week? So obviously, as you know, there's a lot of political and economical things that are taking place in the world right now. There's a lot of rallies and protests against Trump's current sanctions that he's trying to impose on certain countries. So that's definitely having an effect, and you can see that there is some sort of uncertainty within the sort of US economy. The reason I say that, and the reason we can see that with gold, if you don't know and if you haven't been here for previous videos, the way gold and the US dollar correlates is if the dollar is strong, gold's price will decrease, and if the dollar is weak, it will be the opposite, so gold's price will increase. So the reason we've seen this overall bearish drop these last couple of weeks is because the definitive answer for right now has been that the dollar has actually been gaining traction. The dollar has been gaining strength as the moves that have been taking place have actually positively benefited the US economy. However, you can now see that all these protests and rallies that are against the President of the United States, Donald Trump, you can see that that's created some uncertainty. You can see that just in this consolidation here. You can see that the dollar, there's some uncertainty around it. No one really knows what's going on right now, and no one really knows what's going to take place. If I look at the dollar index, you can see the same sort of thing on the dollar index as well, in a lot clearer, in a lot clearer format. You can see sort of since this time last year, we've been in this overall consolidation. We are going to expect that reversal to happen at some point, but what I think is actually going to happen, looking at this, let's just drag this out a little bit further. What I do think could potentially happen is all of this uncertainty, which is caused by Trump and of course other things. I think what we will end up seeing is continued consolidation for gold, potentially some moves to the upside, potentially some moves to the downside, and then I reckon Trump will leave office. And once he does, I think the next person who steps in will very positively impact the US economy, which then, going back to the dollar index, will cause this overall consolidation that we've been in to sort of come to an end and price push back above that 103 level. Obviously, for that to take place, I think we're going to need to see potentially Trump step out of office, or some of these sanctions to sort of be reversed and not imposed, and start to see the US economy start booming again, which we should see closer to the summer anyway. Of course, you have to think of consumer effects. So for example, when it comes to summer, people are spending money, people are going out, people are enjoying the weather, and obviously that causes the dollar to go up in value, or the US economy to grow, as obviously more money is being spent. But we will have to see what happens in terms of gold. I think the overall thing that we're going to see this next coming week is continued consolidation. We do have some higher impacting economic events, including retail sales and manufacturing, ISM manufacturing on the 1st of April. And then, of course, we have our big ones. We have the NFP, so non-farm payroll, and we also have unemployment rate. These are all dropping at, or both dropping at 1:30 p.m. On Friday. I believe that's Friday. Yeah. we'll see this drop on Friday, and that will definitely have some impact in the market. It just depends on whether that's bullish, bullish for gold or bearish for gold. Obviously, we'll have to wait and see. But I will be tapping back in with you in our midweek technical analysis. And as always, I hope you've all enjoyed. Don't forget to like, comment, and subscribe, and I will catch you in the next one.